It's 12 p.m. and we are live with another session. Welcome back, Cédric. Great to have you here today.
Likewise. Always looking forward to this. Good seeing you, Silvan.
It's always a lot of fun with you, for sure. So today we're going to talk about a slightly different topic. We both invested a lot of thoughts and research time also to the topic of personal investment. And you recently became a father, and I think that somehow also changed your perception, because I remember back a few months when we were talking together about potential investment in the stock market, you said, no, it's overpriced, I want to stay away from that, but something changed. So what sort of, got you thinking?
First of all, I think it's still overpriced, or at least, I understand how we got where we are, but I still think it's mind-boggling, the valuations that we've reached and the multiples that are currently being paid. But that said, you're right. My philosophy in the past was always to kind of keep all my eggs in one basket, because that also makes sure my mind stays focused on just one thing. And then when Lana was born, I realized that there is this worst case scenario where I'm no more, or I become incapable of doing my job at some point in the future. And I want to make sure that she would still do well or is taken care of. And so I started to think about how to diversify a bit away from my high risk, high reward investments that I usually do with my venture investments, and create a system where I invest in the stock market that has a number of benefits over venture investments, right? It's more liquid. You can be a lot more diversified. Your portfolio can be hundreds and 1,000 times bigger than your venture portfolio by buying into ETFs and other materials. And yeah, that's what's brought me back on that journey. But as we spoke about it a few months ago, I think, and I still have for me, it was a process to figure out how I want to approach this. Because it's definitely not natural to me to invest in the stock market, especially because I feel that I sold all my public exposure a bit over 2 years ago in 2018, because I just felt like it is not healthy, the valuations that were currently being paid. And so I wanted to make sure I think about the long-term impact and how I do want to invest. And I think we're going to drill down on some of these questions in a bit. But just macro view maybe before we talk about the stock market specifically, I also ask myself, should I put some money in real estate or potentially private equity funds? So give other managers some of my money to manage. And I did realize that I think the stock market is still the one asset class that takes the least of my time if I just follow an automated or a somewhat automated process to invest over the next years. Whereas and by the way, we're not talking about huge sums, so it's not like I could really buy a diversified real estate portfolio. But one of the concerns I had with real estate was that it will come with a lot of overhead. Tenants that would either misbehave or would quit, and you'd have to find new ones, and you can outsource some of that, but there's just a lot more moving pieces involved, and it's a lot more time consuming from everything that I've learned and spoke about with friends. And so I decided to keep my exposure to the exposure that's not in crypto or venture, to have that in the public markets in one way or another.
Right. So I think that's a great intro to tell people where you come from, basically, with your thoughts. Before we get started, just a few remarks. If you do have any questions, want to know more details about what we're about to share, feel free to ask them in the comments, so we can also pick them up in this live Q&A session while we speak. And also important, we are not giving any financial or professional advice. We're just sharing our story and journeys and the thoughts that we had and made for information purpose only. I think that's just important. We're not in the United States, but we just want to highlight that we are just sharing our own experiences, what we think is right for us. It can serve as inspiration, as information, but don't just blindly follow what we say today here. And I think the goal here really is to share somehow a blueprint about how people can tackle and go about their personal investments. But before we do so, maybe the first question, why should you actually invest at all? From your perspective, Cédric, why is that even a thing on your priority list?
Sounds like a very simple question, right? But I thought about it quite a bit as well, because I traditionally I kept more in cash, and I think maybe 20 years ago that was still a decent strategy, because you were actually being paid to keep cash on your bank account if you had it in a Sparkonto, in like a savings account. But nowadays with negative interest rates, I think it's become pretty clear that the only scenario where you definitely will lose is if you keep cash. Everything else is better nowadays. Now, I think you need to put some thought into what to do with it, but that was one of my big realizations. Long term, you're only going to lose if you keep your assets in cash. And then, of course, I personally always try to keep my living costs low, much lower than what I make in income per any given year. So there's also always something that I can put on the side. Either it's from my income, or it's based on an exit, or an investment that we sell, or a dividend payment. And so where in the past I just reinvested that into new ventures, I now wanted to take time to take some of that and put it in a basket where it could kind of generate a return, a passive income, without me having to manage it and without me having to be there for it to be successful. Those were some of the reasons why I decided to think about investing a lot more. What was it for you when you first started to think about this?
For me, maybe I can quickly share a story here. It's not per se about investment, but just how I got into this topic of personal finance and how that caught my attention. So, I started Gym Hopper, my first startup, right after university. So I had, of course, a student job and also summer jobs, but I didn't have any significant income. Then with Gym Hopper, we just paid ourselves 3,000 Swiss francs per month just to cut the living costs, basically, just not to really do much saving or anything of that sort, but just to be able to pay the bills. And then for the first year, of course, you still get like taxed on your previous year in Switzerland. And then the second year into Gym Hopper, I actually got a bill for last year for the taxes, because for the first time in my life, I actually earned more money than before, like some real money, not too much, but still a bit. And then you also had to pay upfront for the upcoming year. That's just how the tax system works. So then I actually got quite a big bill, and I had to suddenly pay like 10K or even a bit more, maybe even 15K. I don't remember the exact number, just in a one-time payment to the tax authorities. And I didn't really have that on the radar. By stretching and making it, it was just like I was just able to pay it, but then my bank account was like empty again. And that just didn't really feel like a good surprise to me. And I thought like, hey, there should be a better way of how to handle and deal with your money by not having to worry about it, but by really just setting up a system that is as automated as possible, that really like doesn't put you in these situations. And then I just thought about like where I grew up with my parents, we have like a fountain, so really a water fountain. So I thought like I established my own fountain principle and just automate all the transfers. So one is just where all the money comes in, and then from there on the payday, everything is just automatically split to a saving account, to the taxes. So I pay my taxes on a monthly basis right now, just because I just enjoy that way more than to having a huge bill at the end of the year. And also an investment account where you also do the automated payment every month. So that was for me like the trigger why I got really passionate about this whole investment, because I had this bad experience and didn't want to end up in a second bad experience. And
let me stop you right there for just 1 second, because that story is close to my heart, because I've probably done like 10 or 15 different budgets over the course of my life. Maybe, let's say 10, right? And while over time, I've become much better at estimating how much I would spend on food, on living expenses, on gas and stuff like that. Taxes, I always find a bit hard to, I just find it kind of hard to estimate taxes in our environment, where our salary might be super small one year and then grow significantly the next year, depending on different outside events. And I'm always surprised that there's not a simpler way to figure out how much am I actually going to be due by the end of the year. Because there's this tax bill that I've probably paid last year for this year as a temporary bill, and now next year I'm going to be taxed the effective amount for this year. I just have a hard time always. Like, have you discovered any systems? You just mentioned that you pay your taxes monthly. Is that, do you just mean you put the money away on a monthly basis, or you actually pay to the government or the municipality on a monthly basis?
Yeah, actually pay to the tax authorities. So what you can do is you can get in touch with them, then they say, hey, I would like to pay my taxes on a monthly basis. Then they will send you an invoice, and you can just create a standing order and pay monthly. No problem about that. Because for me, this is just the automation that I want to have. I don't want to have to deal with that money anytime again soon. So I just want to send it to the tax authorities. It's paid and done. It might not be the highest return optimization strategy, because you could probably invest that money and then take it from there and then pay the taxes. But for me, I just want to have peace of mind.
I see.
And for me, I always think about, okay, what's my income going to be for the year? Of course, this is not always completely accurate, but just a best guess. And then there are these tax calculators online. So I look, okay, how much taxes do I need to pay? And then I usually use those without the deductions or very limited deductions. So then I just pay them 1/12 of that amount every month. And ideally, I still get a bit of money back, or I even hit it if I make a bit more money than I anticipated, but I have some deductions to make. So then it's about even at the end of the year.
I see. Yeah. Okay.
But for me, really, the goal of then investing is, once you actually realize that, hey, freedom, that's where you want to get. At least that's what it is for me personally. So freedom in a sense that you can do with your time whatever you want. I once really thought deeply about that. And it's like, money is good, but it's not like that more is always better. It's really, money is good as long as it can buy you more time. So meaning, at the moment, you need to work, if you're employed, you're 8 to 9 hours a day, maybe more, maybe less, to actually pay your bills and have your income. So to that degree that you can get the peace of mind and the freedom where you can say, I can work, but I don't have to work, that's where you want to optimize for the money. That's basically the wealth that you want to build. Once you reach that point, there is no point in me to go much beyond that total net worth, because then you have the total freedom. You can work, but you can also do whatever you want with your time, because you have all the money saved that you need to pay for your living expenses.
I fully agree. And one question that I like to discuss with friends is, how much money do you actually need to live a happy, fulfilling life? Like if there was like someone was just sending you a check every month and you didn't have to you didn't have to work for that, how much would that check have to be, at least, in order for you to just go on and live a happy life? And what I've realized, I don't know the number for right now, but it's a fairly low number for me. Before I had a family, now it's probably a bit bigger, but I think before that it was about $5,000 a month. Is what I realized. I can stay in almost all places on this planet for about $2,500 a month in rent, and then if I have another $100 per day, I can live a pretty fun and cool life. So fairly cheap, and so that number was a lot lower than I had expected what it would be in terms of what I need in like monthly income in order to be happy and really pursue what I want to spend my time on. And then we'll probably talk about personal financial freedom and early retirement in a bit, but I was just wondering if you had a number like that in mind as well, or if you've ever approached it from that perspective, where you've created a budget and have come up with a number for yourself, like what it is that you want to make in passive income to not work anymore.
Sure. Yeah, it's a very similar approach as you just described. So for me, if I would just look at myself personally, it would probably be between 3 and 5K. More towards the 5K, because you just want to optimize for peace of mind, not just for having just enough money, but really don't need to worry. But then if you think about, you now have a family. I don't, but maybe one day, who knows? So there, I think you probably would need to go for 150 to 200K per year in total expenses for the whole family, including taxes and everything, just to be really on the safe side. And then you can basically multiply that by 25, because you would assume that there is approximately 4% withdrawal rate that you can take away from your savings, because that would be the return that you estimate to get in the stock market if you are invested with most of it. So you would basically be able to live from your net worth for a pretty long time until you die, ideally.
Yeah, so you packed a lot in there, and I think this formula, the 4% of average interest that the stock market pays you, that's something that for me was quite an interesting realization. If once you have a pot that's big enough and you put it in the stock market, it doesn't matter that much if you go down 1 year, because over, let's say, 5+ years, it will always average out. And if you look historically at the last, I don't know what they've looked at, but probably like 30+ years, the average was probably even higher, like 6-7%. Yeah. 4% is even on the conservative side.
Exactly.
And so if you were to live comfortably with your family for 200K, that would mean basically multiply that by 25 equals 5 million. And then with 5 million invested, it would mean you can probably live off of that passive income, and you don't need to worry about a monthly salary anymore. Doesn't mean you probably, both of us probably wouldn't stop to work on something. But it's a very interesting concept, because it gives you so much freedom to really pursue what is close to your heart, instead of what you think provides you with the best way to get to that 5 million goal or any sort of short-term incentive.
Exactly. I think, it's a good goal to have, but we also shouldn't get too focused on that. I mean, if you then just think, oh, I just want to get to the 5 million or whatever your goal is, and you only focus on that one, you probably miss out on a lot of things in life. So I think it's good to have that as a goal, but not going just after that goal and forget everything else. So money is just one part that is, of course, important to have a good life, but there are so much more important things out there too. So we are only tackling one part of the happiness formula, I would say.
Yeah, but I think it's the important part, right? I know we both read the Mustachian Post, which is a Swiss blog that focuses on this retire early, financial freedom, or the other way around, financial independence, retire early movement. And what a lot of these bloggers do, they live a very frugal life. They try to save as much so that they can retire in their 30s, in their 40s, whatever their journey looks like and whatever their number is. Might be a bit different, but I agree with you. I think for me, it comes down to a balance between thinking of the long term and investing, and kind of investing in future, not luxury, but like something that I'll enjoy in the future, and I'll make a sacrifice today for that, and balance that off with really living life today and in the moment, enjoying it, and just generally being a happy human being by doing what I'm doing. So totally agree on the mix. So maybe we can talk a bit about how did you then go, once you realized that, how did you go about making your investments?
Yeah, I didn't have any clue. So there's also another story to share. During university, we once were at the dinner, and my parents, they talked to a successful businessman, and he said he also studied business, and his dad back in the days gave him 10K to play in the stock market and learn. And then my dad thought, hey, this is actually a great idea. He just liquidated his fund that he had with his bank, and then said, I invested and just learn as he did. I was like, Jesus, that's cool. And then I tried to stock pick, and also my dad was like, oh yeah, go for this stock, go for that stock. One of them was Waldburger, and there we had like 95% or something. They went south completely. It's insane. And that was like, of course, it's shit if you lose money by doing that. But you also learn that it's actually really difficult to beat the market without investing a significant amount of time in analyzing, selecting the right stocks, and so on. And then I started to discover all these great resources like Mustachian Post, as you mentioned. Mark actually also just published a really great book about how to retire in Switzerland by 40. There's also Mr. Money Mustache, the US version, Ramith Sethi in the US also. And Remo Uherek, also a member of the Swisspreneur Founders Committee, he just released an online course about the whole personal investment topic. So these are all resources where I then just started to read because I'm just somehow exposed to these cool people. And then I just started to pick up the one or the other and just saw, hey, actually ETFs is probably the best way for me to go, because then you diversify broadly, ideally worldwide, across all the different industries, and you just do your monthly payment there. Don't need to worry, automate it as much as possible. And then you also get the average stock market return, which, as you just said, if you look to the past data, you have a return of probably 6 to 8% per year. So that's then just how I first failed, learned from that, and so, hey, you can actually not stock pick without doing a lot of work in there. And the passive investment strategy with ETF is just the best one for me.
I can totally see that. And I think another key factor for me is my negative bias. So I think my benchmark will always be what the stock market overall did, right? If it went up 10% or if it went down 10%, that's kind of my baseline. And of course, I'm going to be happy if I beat that, but I'm going to be exponentially more unhappy per percentage that I lose compared to what I win. Meaning, if I beat the stock market any year by 10%, that's nice. But if I lose 10% compared to what the market did, that's just going to feel very bad, because I've now invested so much time, probably because I like to go down the rabbit hole and I do care. So I'll probably invest quite a bit of time into trying to find these stocks. I'll probably also spend quite a bit of money on fees in the process of buying and selling stocks actively. And then at the end of the day, I think that was a realization for me as well, is that with the majority of my assets that I am planning to expose to the public markets, I just want to follow a very simple strategy. And I'm still in the process. And then maybe let's go one step further. So you mentioned exchange traded funds, ETFs. And they're generally seen as a much better way to invest compared to mutual funds. Mutual funds are typically actively managed funds, meaning you pay a management fee. And overall, because they have this active quality, you'll spend more on trading fees and the fund buying into or selling certain stocks. So ETFs seem like the better option long term, because every percent that you save per year will accumulate over the years and generate extra return. How did you go about picking the ETFs that you invest in, once you've made the decision that that's the vehicle that you want to go with?
Right. They actually I had a long conversation with Mark from Mustachian Post about that. And we basically looked at what is the volume, like how many of the ETF shares are traded. I think that's just important, that you also always have enough liquidity. And then, of course, the expenses, like what are the fees that you pay? And you want to have them as low as possible, but also that be diversified as globally and as industry diversified as possible. So then there's, I forgot the name, but there's like a platform where you can then select and apply different criteria and then select the right ETF for you according to your criteria. And we did that together then. And the VT by Vanguard, it's like a total stock ETF, is then the one that was the best fit for me. High volume, super low fees. They are actually located in the US, so that's where you even have lower fees. And that was then just the one that I picked. And this is also the only thing that I focus on. No single stock investments anymore. Also no other things, just that VT ETF, and I pay there every month, and that's it. Super simple.
And that last portion, maybe we can talk a bit about, you don't have to name the specific institution.
Oh, 1 second here. Yeah, here, just ETF is the platform. Thank you for the hint, Martini.
Oh, great.
That's fantastic.
So just to talk about that last bit, you mentioned that you pretty much automated this. Like there's an automatic transaction from the account where you receive potentially your salary to wherever that gets invested. How did you automate this for someone? Because like I think it's interesting to understand like how far can you actually automate this? Does it mean you still have to log into your broker once a month and then actually make the transaction, or have you automated this all the way?
No, unfortunately, that's the part that I still have to do manually. So on the 25th, when I get my salary, there's an automatic payment from my checkings account to the broker account, and then I just log in there, do the trade, and then the next day I check whether the trade was confirmed or not. There are I think they call them ETF Sparpläne, so ETF saving plans in Germany, for example. So there it's way more common that you just send your monthly payment and then the bank automatically invests in the product that you selected. But that's not very common in Switzerland. I think there are some solutions out there, but usually because then there's a Swiss solution, they also have higher fees. So for me, it's totally fine to just do that one trade per month, which is about 3 minutes of my time maximum.
Yeah. And then have you looked into, as I was doing research, I have a similar goal to automate as much of this as possible, because I also know that's when I'm going to be the most rational. Yep. If I jump into it and I see the number every month, it might trigger something in me and I might question my strategy, either good or bad. And one way that I found, based on my research so far, is that there's these robo-advisors that basically you can send them a transaction every month, and then they do all the rebalancing, they do all the buy-in for you. So it can really be a total hands-off approach. Was that a conscious decision on your part to not choose that, not choose a robo-advisor to do that?
I actually looked at them, and I really like Truewell for Selma. So these are really cool robo-advisors in Switzerland, I would say. And I also think that they are great to start. But there are two things that I didn't like. Of course, they have not too much, but still slightly higher fees than if you do it yourself. So for me, just because I want to really focus on the long-term compounding interest, this can still add up and makes a significant difference, especially the more you invest, the higher the fees don't get higher, but the percentage, so the total fees that you actually pay them in cash will increase. And that's just something that I didn't want to take. I wanted to make sure to optimize for the lowest fees possible. Mm-hmm. And the second thing is usually you are diversified there. And because I really have this long-term approach, I decided that for me, stocks, that's the only and the best asset class that I want to focus on. So therefore, I'm not interested to have any bonds in there or any real estate, whatever is else there. I just really want to focus on a pure stock market ETF. And therefore, you can still do it there. But I think depending on your risk profile, they will still have some sort of bonds in there, some cash, some real estate probably. And for me, it was just like, this is a great product to get started. But because of the fees and the limited focus on the pure stock portfolio, I chose to do it myself.
Got it. And then from what I understand, because you invest in one US ETF, you are also fine with having all your exposure in dollar. Because that's something that I thought about as well. Like, what is my worldview, both on a macro level, but then also on my personal life? What kind of currency do I want to keep as my base currency? Is it dollars? I think so far I still spend most of my time in Switzerland and thinking in Swiss franc when it comes to my personal assets, but also when we make an investment, I typically think in Swiss francs. At the same time, I realized that I'm not always going to be living here. I do need different currencies just for my future and where I'm going to be spending my time. So that's another thing that I personally value about these robo-advisors, is that instead of having to go through the process of picking the best ETF for each and every currency in each and every market, if they're a good product, they can take that decision away from me, or at least make it significantly easier by already filtering for low expense ratios and so on. Another thing that often comes up and is this US estate tax. Right, and I'm not an expert in tax, so no one should take my advice. But from what I've understood is, if you have assets above 60,000 US dollars directly invested into US stock. Everything above that is subject to a US estate tax, meaning even if you never set a foot in the US and you, for some reason, die here in Switzerland, your whole estate might still be taxed or is subject to this estate tax. And I've heard or I've read about cases where this process was completely blocked and quite a bit of hassle emerged for some people that had, for example, were holding Amazon or Facebook stock. How do you think about that? Because that seems to me like a very a big complication potentially for whoever needs to take care of my estate and divide it and figure out where things are. And so it would be interesting to hear how you thought about this when you picked the purely US product.
Sure. So to be honest, for me, it's probably a very naive thing to say, but for me, it doesn't matter at the moment. So there's no one depending on me. There's no family around that says, hey, if you die one day, we really do need the wealth that you built. So for me, this is just not relevant at the moment. If that changes one day, which might eventually happen, then I will, of course, reassess, because then this is a very significant thing that is important to consider. And then it's way more likely to move the things to Switzerland, or at least to a European domiciled product. So also the VT, now I'm using the American product because it's cheaper. And with interactive brokers, we talk about that I use as a broker. You have direct access to the US market, which is great. But as soon as my personal situation changes, this will probably also change and get to a more local approach, even though you have slightly higher fees. But I just didn't want to miss out on the little compounding effect that it might have over the next 5 to 10 years still.
Got it. Yeah, totally get it. Yeah, you mentioned your broker, Interactive Brokers. Maybe because that can be quite the decision as well, right? I looked at a number of different brokerages and I read quite a bit. I ended up also choosing Interactive Brokers, but for me, it was quite a steep learning curve. One of the issues that I saw with Interactive Brokers is that their interface seems to look very different on different platforms. So they have a Java application that you can run on your desktop. They have an in-browser application, an iPad app, and an iPhone app. And for me, nothing was really usable except for the iPad app. And I mean, the iPhone app is nice to quickly check in and get an idea, but I never felt comfortable making a trade on them until I discovered the iPad app that looks, to me, is the one that's the most user-friendly. So I was wondering how you, two questions. Number one, have you made the same experience with Interactive Brokers? And then second, taking a step back, how did you end up with choosing Interactive Brokers versus, there's many big names in Switzerland, right? You could go with Credit Suisse, UBS, Swissquote, the Giro, and a number of others.
Yeah, absolutely. So the experience, it was a bit similar. So at first, of course, it's a bit overwhelming what you see and what you can do in Interactive Brokers. But then I just ended up using the iPhone app and also do all the trades just with the iPhone app. It's just one trade per month. So that's actually fairly simple. The selection process was actually also, again, a discussion with Mark from Mustachian Post. He was an amazing resource in that regard. And basically, I also compared the fees on my own. And I think Mark says if you go long-term, over 100K in invested assets, then Interactive Brokers is just the cheapest one. So they have very low fees. And for me, also important, direct access to the US markets, which is not the case if you use Swissquote, for example. Mm-hmm. Then you can get the same products, but only the products that are domiciled in Europe. And if you don't want to pay higher fees, as I don't want, then the American access is a great addition there.
And you might get lower liquidity as well, right? Often the European products or even just the Swiss product might have a lot lower liquidity than something in the US, which is important if you want to switch at some point and you don't want to move. You definitely don't want to move the market, and you want to be able to execute that move within a reasonable time frame.
Exactly. Yeah. So there are a few questions that we could tackle now. I feel that this is a good time to go after some viewer or listener questions. So the first one here is from Silvan Tubi. What are the most important skills a person or team should have to make good investments? Stocks, buying businesses, etc. I think you have quite something to share here.
Yeah, I think the first I would say is buying stocks and buying well, if you say buying businesses, I assume private companies and potentially venture. So I think that the skills are somewhat different. For stocks, my realization so far is that you want to have a very long-term process, a very long-term thinking that you want to apply, and you want to be extremely rational in your decision making. You have a lot of numbers available that you can use to make your decisions if you choose to have some sort of trading strategy. And then if you're in the private world, things are a lot more opaque. So you will not have the same transparency. Typically, it's harder to get a company's revenue numbers, profit numbers, size, or hear about their strategy going forward. So I think when you're buying businesses or shares of a business in the private space, then your gut feeling and your research is a lot more important. Gut feeling is in the end, it's all about people when it comes to strategy. And then second, research, because you really need to understand the target market and how this specific company is going to move within that area. So that'd be my answer. I think for the public market, I think being rational is a huge skill. Being able to buy more when the market goes down instead of selling when the market goes down is important. There's this term of dollar cost averaging,
yeah, exactly.
Maybe that's the term. But basically, what it means is when you follow a strategy like Silvan does, where you invest a similar amount every month, independent from where the price is, you're naturally going to buy more when the market goes down, and you're going to buy a bit less when the market goes up. And I think this rhythm and this routine is what's really going to help you in the long run.
Yeah, because then the strategy is that you do get the average price, right? Because you buy every month, you probably then end up by getting the average price of the whole year. A tip or two tips there. If you do have like smaller amounts and just don't want to pay the transaction fees with your broker every time, you can also do that on a quarterly basis. So then you can just save for a quarter and then invest once a quarter. You would still get a sort of a cost dollar averaging bonus. And now people that might just get started and have assets available, there was also the question like, now should I invest everything over a period of time, or should I just invest everything at once into the stock market? Funnily, I mean, I'm not really, I don't have all the data available here, but I think they did once a research with K-Geld, if I'm not mistaken. It's a Swiss magazine from the K-Tip, just about personal finance stuff. And they once did a research there and checked the data, and you would actually have been better off if you invested everything at once. And that was interesting to me because I wouldn't have expected that. If your money comes in on a monthly basis, then invest on a monthly basis. But if you have a big chunk to invest, it might be better to start investing everything at the same time, because the stock markets over a long period of time, they are very volatile short term, but over a long period of time, they usually increase, and that's what you want to benefit from.
But I totally understand. For me, I do understand. I've seen the data as well. I do understand that long-term is the best decision. And still, I have this mental barrier to just move a large part of my assets into the stock market at once, combined with that feeling that I still have that the market is just, it's at the record high. Everything is so expensive, and that personally, I still think it doesn't really mirror what's happening in the real world. I think there's lots of issues and lots of troubles that are brewing right now. But I do understand that I read recently that 25% of all US dollars in existence have been created within the last 12 months. So it's just, it's clear that money had to go somewhere, right? All that liquidity had to go somewhere. And with presidents changing, I don't think there's going to be any change. So I am optimistic for the market price, even though I'm slightly pessimistic for the real world, where I just think there's lots of things that aren't going as well as the market portrays them at the moment. But I'm deviating. But
But I mean, there's basically no alternative to not being invested.
Yes.
It's that simple.
Yeah.
So here, also, covering the topic that we discussed before, Ishan asked, do you use any US dollar Swiss franc hedge as well? I personally don't, because my volumes are just too low, I would say. But you thought about that, Cédric.
I did, and I don't hedge them, but I do think about allocation in terms of what part of my assets do I want to have in Swiss-based products versus US dollar priced products. So I do not hedge, but I do diversify.
Fantastic. And now we talked a lot about stocks, but Pascal Oikster also wonders if you do hold any cryptocurrencies, and if so, which ones?
I do. It's part of my portfolio. Of course, I hold tokens from a project that I helped start, Dfinity, which is not trading yet. And then I do hold Bitcoin and Ether. Bitcoin, because I think it's more and more justifying its place as the digital gold. I think it cracked 20K recently. So it's very interesting to see where it's going to go in the next few months. And then second, Ether, because I really like the product and the project. I think what they've done is so innovative. There's lots of copycats, but I think Ether has done a lot of really great stuff. And with their move to ETH 2.0 now and the staking that they recently introduced, I like the project without spending too much time on it, but I do think there's a lot that goes in the right direction. Plus, it allows me to stake.
Fair point. I also held Bitcoin and Ether just as you did, but I sold them. I don't remember when. Just after they doubled, I felt like, okay, that's fair enough. I just double down and focus on the stock investments. What I actually also tried out was some gold, but I also sold all of that after it significantly increased during the pandemic. And I also tried some crowd lending, or I think crowd lending platforms. And there was actually one fraud case from Estonia that went complete bust, and they disappeared with the money. So I lost 3 to 4K there.
Wow.
Happens. It's a great learning. But then I also realized, hey, this is just too much work and also too much stuff to worry about. So for me, it's just I double down on my stock ETF, and that's just everything I do. I love it. Simple and peace of mind optimized as good as possible.
And how did you get to that peace of mind? Because clearly you do think about other assets as well, as you just described, right? How did you make the decision that the best, is it just because there's the most data around the stock market, or historically there's been the best trend? Is it because most assets are invested there? How did you decide to go all in on the stock market and not do any, for example, to sell your gold or crypto exposure?
So first of all, I like to have a real asset behind it. So with gold, for example, it's just it's the value that people place into gold, right? It's a bit similar to money per se. It's paper, but we think it has some value, right? So for me, I really prefer to have the real asset behind that can generate cash. And for me, these are businesses basically. And then also, if you look at the long-term historic data, also compared, of course, you cannot strictly compare that to crypto that well. But for example, stocks over real estate, stocks have continuously outperformed real estate in the long run. And therefore, it was clear for me that's the best asset class for me because I have a very long-term horizon, and that's what I'm going to focus on.
Yeah. Okay. Makes sense.
So there are many more questions coming in. So Martin Mondo asked, are you still buying crypto on a regular basis, Cédric?
It's not as automated as the approach that Silvan described, mostly because I think whenever I have a pocket that I want to put in crypto, it's actually easier for me to follow this rationale of it's better to just be invested. And so typically I make larger buys, but not on a very frequent, I mean, for my scale, larger buys, but not on a frequent schedule.
There's actually a Swiss startup that I recently discovered, Relay, they are called, and they didn't really advertise it that well, but you can actually have recurring payments. So you just create a standing order on a weekly or monthly basis, and then they invest for you just in Bitcoin on that regular basis. And that's something that I really enjoy, because then you can also apply that cost dollar averaging strategy. Sorry, I messed up the term. On the Bitcoin front. So that would be something that I would probably use myself if I were going back to Bitcoin.
Yeah, I met the founder probably like 4 or 5 weeks, or maybe a couple months ago, and I think he's a great guy, and I think it's pretty impressive what he did with Relay, and he's working on something new now, which I'm pretty excited to see soon, hopefully.
Awesome. Here we have a really interesting question coming from Ishan. Thank you for putting it here. So Buffett says, when there is greed, sell. When there is fear, buy. Now is the timing of this podcast, coincidence with greed in the market. Tesla, one of the best clean tech globally, is like a price earning ratio of more than 100. Any view on that one?
So, I think that's exactly where I do not want to go with my investments, because then I start to think too much and I make emotional decisions about the stock market. Similar to what Silvan explained, I'm trying to think very long term, like at least 15 years that I want to keep my money in the stock market. And by averaging out my investments over some time, I hope to neither buy at the highest high nor the lowest low within the next few months or within this time period. In general, I think greed and fear is just a different word for whether demand or supply is higher. And I don't have a specific view on Tesla specifically, or the PE ratio that Ishan mentioned. But I think I expressed before that I think overall the multiples have gone up so much that I don't understand where it came from, except for the liquidity that was available in the market and had to be put somewhere.
Exactly. I mean, I think his statement is of course pretty accurate, but still, I think what we live through now is we've never been in that situation really, where so much money is flooding the market, and that money just needs to go somewhere in order to not be hit by negative interest rates or by being eaten up by inflation. And that's probably why the prices keep going up for a bit longer until that party stops to a certain degree.
Actually, one thing that I do want to do more frequently now is just journal about how I see the world, both for my venture investments as well as for my public investments. I think it's such an interesting task to sit down and just write about what do I see go right and what do I see go wrong in the world right now. Because ultimately, as an investor, I think that's what you need to become good at, right? You need to have an opinion about how the world is going to change in the next 1 year, 5 years, 10 years, whatever your horizon is. For us in the venture space, it's typically 5 years where we try to anticipate what are some trends that are still under the radar, but are going to be huge in 5 years from now. And that's one thing that's on my list, to take more time to consciously sit down and kind of follow a process to write about how I see the world. I don't know if that's something you do, Silvan, but I think just to challenge my mind and train my conscious in understanding the world as it is right now, I think it's very interesting.
Yeah, I would love to read more about that from you. And once you put that in writing, then we do a live session about that, okay?
Yeah, sure. Let's do it. Yeah.
So now we covered a lot. We talked about brokers, we talked about asset classes, and also where to start. I just wonder if there are any last tips or tools that you want to share before we wrap up today's session.
So maybe one thing that I can share is how I approached all of this. You mentioned a lot of the tools, but one thing that I've learned for myself over the years, and I just talked about it, is just to write. It really helps me to unblock my brain. If I bring my thoughts to paper, I share them. I've shared them with you, for example, and get feedback on it. I can quickly, let me see if I can quickly share my screen.
Yeah, that should work.
Let's see if yes, that should work. So you should see my Notion come up now. Did that work?
Yes, here we are.
Yeah. So I just sat down a while ago, and I started writing about how do I even want to approach investing, and what is important to me, and also what are the dimensions I want to think in. And so we have Swiss francs versus non-Swiss francs, but also things like liquidity versus liquid versus illiquid assets, equity versus debt, short versus long, and so on. And I wrote a bit about, and this is one of my macro views, what has happened in the world that I think will have a lasting impact. And the US election was part of that. The money that was printed was part of that. Then I wrote about first, I took a very high level approach where I wrote about all kinds of different assets that I could be investing in. Then I excluded a bunch of them. I also included proactively. I further refined that later on. I started to think about what is the split that I want to apply. And then one thing that emerged from conversations with you and others is that it wasn't as simple as I wanted it to be. I think the way I constructed my portfolio would have been way too much work, way too many places where I'd have to constantly look and kind of track. And so I decided to simplify a lot and basically just have crypto and public exposure, mostly through ETFs, but also choose some individual funds and either people or friends that I really believe in. And so takeaway here for me, you asked me for tools, and I think it's not a specific tool, but I think this past year, I really learned about the power of bringing thoughts to paper. Because I can be a lot more, for me personally, I just realized I can be a lot more structured on paper than I can be in this conversation, as you probably noticed. Because I keep jumping and I keep refining and going down the rabbit hole. But if it's on paper, it's fairly easy for me to start with bullet points and then add to those bullet points and add more questions and let it rest for a few days and go back to it and add questions. So that'd be my number one tip. If you're thinking about investing, try to become conscious of all the emotions that you have in relation to investments, all the thoughts, all the dreams and wishes, but also all the fears. Write them down, and that for me solved a lot in this process.
Now, I also really enjoyed reading through your thoughts. I felt like this is a really great piece to read and to also get inspired and get some more thoughts around what you wrote down. If I had to give any tips, I think there would be two. First is like really compounding is your friend. So try to get started as early as possible, because over time, the compounding interest is so powerful. And therefore, it's also important to keep the fees low. That's what we discussed. And the second is probably don't try to time the markets. Just create your system, take the emotions out of it, and then just invest every month, every quarter, whatever feels right for you. And keep the consistency there up and constantly invest and always be invested. I think that's the most important part. And
that's a great summary. Yeah.
To maybe wrap this up, there's really a quote of one of my favorite authors and philosophers. I probably also call him from Naval Ravikant. And he says, money solves all your money problems, but also not really more than that. So there's so much more to life. Make sure to not overthink the money part, but optimize it for peace of mind. And it's important to take care of it, but there's a calm mind, a fit body, or also a house full of love, as he describes it. These are things that you cannot buy, but that you need to earn. So make sure by optimizing all your money stuff that you still invest enough time in these other areas, because that's important in life too.
Great closing words.
Hey, Cédric, that was a lot of fun again. Thank you so much for taking the time.
Likewise.
I'm looking forward to the next session. Hopefully in January, I guess.
Yes, happy holidays. For me, it's the first time in a while that I'm consciously staying away from the screen for a few days, just to be there with Lana and really clear my mind as well. Lots of things have happened this year, especially in Q4. And so I want to make sure I come back strong and energized in January. So I'm going to try and be on vacation for a few days.
Fantastic. Wonderful holidays to you too, and to everybody listening and watching, and hope to see you again in the new year. Take care, everyone.
Cheers, Silvan.